G'day. Welcome everyone. Welcome to the LeapSheep Startup Builder Live Q&A. I'm your host, Kirk Drade, CEO and co-founder here at LeapSheep. At LeapSheep, our mission is really simple. It's to help startup founders reach product market fit faster, cheaper, and with less risk. This session is designed for founders who are navigating early traction, making decisions under uncertainty, and trying to build something that actually works in a repeatable way. We bring people in who have seen patterns from across multiple companies, so we can focus on what drives real outcomes for you, not just theory. Today, we're going to do a deep dive on capital, investors, and scaling beyond your local market. A quick one before we start. If you've got any questions, drop them into the chat. And if you don't yet, drop in where you're joining from. We'd love to hear from you. One of the biggest challenges that founders face is not just accessing capital, but understanding what kind of capital actually moves their business forward, because not all money is equal. Some capital accelerates growth, some actually creates friction, and most founders only realize the difference after it's too late. Today's session is all about understanding what actually drives outcome when it comes to capital and growth. Today, I'm so pleased to be joined by Phaedon Stough, CEO and co-founder of Innovation Bay. Phaedon has spent over 20 years at the center of the startup ecosystem as a founder, as an operator, as an investor. Through Innovation Bay, he worked closely with founders and investors across Australia, US, Europe, and helping companies connect with the right capital, build meaningful relationships, and scale into larger markets. He's seen firsthand where founders get it right and where they consistently get it wrong. Phaedon, it's absolutely fabulous to have you here. Welcome.
Thanks for having me.
Let's jump straight in. You've got an amazing background. Tell us a little bit about the journey to start Innovation Bay. It's been a long journey to get to the current iteration. Just tell us a bit about that origin story.
Yeah, look, we were in Sydney at the time and looking for an environment where we could learn from other founders. People that were a couple of steps ahead of us, and so we couldn't quite find that back in the old dark days of early 2000s. So as every entrepreneur does, we decided to create it for ourselves. So we started a small networking group in Sydney that was made up of CEOs and founders and operators, and we came together over small, intimate dinners and breakfasts, and really kind of talked about scar tissue of building companies and how to learn from each other.
And this was in the internet era, right? This was early 2000s.
It was.
Yeah, right. So you've seen a few technology waves now. You've seen the internet. You've seen the cloud mobile. you've seen the AI boom. So that must be serving you well.
Yeah. I mean, there's a lot of different cycles. It never stops changing. I mean, there is no consistency. There's a myth.
Yeah. There's the cycles keep changing, but there is consistency in some of the themes that you see in founders, I assume.
Definitely, yeah, definitely that theme of learning, being inquisitive, seeking advice from the right channels, and then filtering that advice into actionable outcomes.
And was there a specific time that you sort of realized this pattern where founders were making mistakes that you could start predicting? I mean, all experts get to a point in their journey where they start to see patterns, and that's what makes you an expert, right? You see more data than non-experts, so you can see patterns. Yeah. When was that for you? When did you start recognizing that you could see patterns?
I think it was probably while I was living in the US. It gave me a bit more exposure to a broader array of founders, having started my journey kind of in Sydney, and then we worked across Sydney and Melbourne for a while. So we got to exposure to a bunch of different interesting companies, but really kind of going over to San Francisco and spending a bunch of time in San Francisco and working with different VC firms and a whole range of different founders really took that education and knowledge base kind of to the next level.
Yeah, wow. So that experience in Silicon Valley from a cultural perspective, just tell me about that, because I think that's one of the things we were talking off earlier. But it's not just about technical talent, is it, or marketing talent, or pick your favorite part of the business. It's sort of about mindset. Can you tell me about what's different with Silicon Valley and the mindset there?
Yeah, and I think we're kind of evolving this in Australia as we kind of build our tech ecosystem, which takes time. But I think the key thing about that US market is not so much that the intellect of the market or the scar tissue, is just the mentality of playing it forward. You know, they're very willing to give time and very, very willing to engage and help other people. And so that's a very finite amount of time. You know, generally they will provide one meeting to most people to engage, but they're so inquisitive and they're so engaging that you can pretty much get a meeting with anyone when you go over to the US. And that play-it-forward mentality really helps founders shape that. How am I taking my product to market? You know, who should I be raising capital from? Because that experience and that advice is so well shaped. You know, those people who are giving that advice have so much historical data, scar tissue. A lot of the VCs are ex-operators. You know, there are a lot of like angel investors who have done multiple startups and, you know, now invest full time. So there's a lot of like scar tissue in that market that really helps curate really strong advice and feedback for founders. We don't quite have that in Australia. It makes it quite tricky.
Yeah, I mean, that's a couple of really interesting observations you make there. Is like the scar tissue one and the experience is one, but also that willingness to meet. So what I'm hearing is that, you know, top tier investment firms will meet, you know, new founders. Is that what you're saying? Is that something that you see that's different over there?
All the time, and also just ex-founders. You know, like people who are kind of like celebrity founders over there. You can get meetings with and a whole bunch of other things. You know, they go out to networking events. They play a role in helping curate and engage that ecosystem because they love it. That's how they were brought up. In Australia, we don't really have that. We don't have a lot of like later stage founders just going to a lot of events, giving back all the time because there's some awkwardness to it, and there's not really a lot of platforms on which they're enabled to kind of happen in an easy way. And we're also very disparate. There's Melbourne, Sydney, you know, Adelaide, Brisbane. We're all kind of all over the place, so it makes it a little bit trickier.
What do you think the mindset is that's driving that kind of behavior from those US founders to get involved? Is there a different kind of psyche or mindset?
Yeah, I think ultimately everything in America is about one thing, which is about making money. I mean, making money and making impact. You know, those two things are very well aligned, and they really understand the intimacy of that relationship. Without money, it's very hard to make impact. So, like I ultimately see that US marketers, they're very kind of specific on meeting with people because they feel that there's opportunities there to make money, and so to invest at seed, to invest at that Series A kind of round. And they've got that general amount of liquidity where they can do that at kind of scale. You come across a lot of like angels over there, ex-founders who have done really well, who, you know, are investing 50, 100K lots, and they've done, you know, 50, 100 investments.
Yeah, right. So those founders and investors have got that very wide top of the funnel. They want to meet as many people as they can to figure out who's going to go through.
Yeah, all the time.
Whereas Australia, we're a little bit more selective.
Yeah, first of all, I think in Australia we don't have that angel network. We don't have, you know, 1,000 ex-founders who have kind of had exits, who are now contributing capital back into the market. We're slowly evolving that, but we don't really have that. And so when people are out there raising capital and they're trying to raise money, you see a lot of people raising money very early on from people who don't come out of tech. They might be allocating some of their super capital, or they might be a family of friends, but they're not kind of tech entrepreneurs, so to speak. You know, we're slowly evolving that part of our ecosystem at the moment, but it's taking time.
And what impact does that have on founders if you've got people that are, you know, taking money out of the super, or you know, they've come out of property or some other domain? What is that doing for our founders here?
Well, you know, we do get asked questions, and we do provide a lot of guidance, I think, on capital raising sometimes, in terms of who should you be seeking capital from? You know, and we ask a lot of founders, who do you want on your cap table? You know, we get a lot of founders coming to us to pitch because we have an angel investor network that's very active. And so one of the questions that we always ask founders is, who do you want on your cap table? And most Aussie founders would go, anybody. You know, so anyone who's willing to contribute some capital. And and I totally get that, right? Because it's really hard to raise money here. It's very inverse to the US, where it's like, I want a CMO who's got experience in B2C marketing with a focus on East Coast, you know, or whatever that might be. So, you know, the thing for Aussie founders to realize is once you get someone into your cap tables, you can't get them out. Very, very hard to get people out of your cap table. And if you've got people in your cap table that can't help you build the business or attract further capital, that's probably not the smartest capital that you want on there.
So you just use the term smart capital or smart money. What? Tell me a little bit about what that means for a founder that's just sort of joining, that's thinking about raising for the first time. Help me understand, what does that mean?
Yeah. Well, so I think there's a great question to ask people that want to invest in your company. And the questions are things like, who can you introduce me to? How can you help me get a customer? What sort of skill set do you have to help me with taking my product to market, to growing my product, growing my team, or attracting other capital? They can't kind of answer those questions, and I don't think they're great to have on the cap table.
Yeah, right. And so it sounds like it's as much an interview for the investor, or it should be, as it is the investor interviewing the startup.
100%, and that's what we've got to get better at. Luke Anir is actually a great person on this topic, and we've done a podcast with him a long time ago, but he was super selective on who he let into the cap table. And you definitely see that as a very normal thing in the US and a very unnormal thing in Australia. And so we kind of got to evolve that, because that smart kind of capital coming into your business is really critical. It changes your success ratio significantly. And so the advice, generally there is, depending upon what your business is, do the research and think about who can help you grow the business, not just put liquidity into it. And what you generally find is those two things are very synergistic. Once you start thinking about, I've got a B2B business in this vertical, and I'm going to go research people that have made money out of that vertical, or who have an influence or impact in that vertical, and I'm going to start reaching out to them. They could be entrepreneurs, they could be senior executives in large business. What you generally find is that they give you great feedback, they help you understand the market better, and they also are more willing and interested in giving you cash.
Yeah, right. And what would you say to a founder that's like, I'm running out of capital, I really need to take anything that comes my way? How would you answer that question?
Yeah, look, I think
it's hard to raise in Australia, isn't it?
Look, part of the problem is, as Aussies, we hold on for a long time. We really kind of do struggle with the notion of failure. And part of that trickiness is that if you look at startup failure rates, they're in the 90 percentile. So 90% of people that come up with an idea don't make it through to building a business, basically, a substantial business, 10 million plus, right? And so the first question you really got to ask yourself is, are you trying to make $100 million revenue business? Are you a venture business, or are you a lifestyle business? Entrepreneurs sit in both those verticals, right? If you're a lifestyle business and you build a business that's doing 3, 5, 10 million in revenue, you're pretty happy, right? That's a great business. If you're taking venture, those venture investors expect a 10x return. So you need to think about the fact that you've got to have a runway there to scale that capital to a 10x of whatever they've come in on the valuation metric side of. And that can be very tricky. That's not an easy business to sort of scale. So you've got to make that choice early on, and then you've got to work out, if you're not on that pathway, isn't it better to go, we're not going to make it, let's kill it, and I want to start something else again. Now, yeah.
I was going to say, is that one of the challenges that you think we have in the ecosystem here, is that we're not helping founders understand that fork in the road early enough, or maybe we're too encouraging to help them continue spending time and money on a path that they don't even realize what path they're on yet?
It is a cancer that we've got to work out how to cut out of this country. And our most active angel investor in our community is an American who's now relocated to Australia. And, he's a great guy, super active in our community and in the community in general. And he is constantly amazed by how Aussie founders hold on to a business that they ultimately should just kill. Now, we totally understand that, because there's a stigma associated with that. And that's what we got to kind of get rid of. I can remember we used to do a lot of work with Excel. Excel funded Atlassian. They funded a bunch of Australian companies. They're a top tier US VC firm. And they used to say to us, our most attractive deals are second time founders, where the founders failed the first time.
Yeah, right.
Because the educational learning out of that failure on the first time, we know they're not going to repeat those same mistakes.
Yeah.
We don't have that in Australia quite yet.
Yeah.
We struggle with that on an investor side in a number of ways, and we've got to change that.
Yeah. We've got such a fabulously supportive ecosystem here in Australia to help founders actually becomes a liability, isn't it? Did I drop out there? Pete, can you? All right, I think we might have lost either me or Phaedon. There we back. I think we're back. Did I lose you for a sec? Can you hear me? No? Testing? Phaedon, can you hear me? Hello? Hey, can you hear me? Phaedon, can you hear me? Jara can hear me? Don't know. Can you talk, Phaedon? Okay. So I think can you hear me?
I can hear you now. Yeah.
There we go. Awesome. I'm not sure what happened there. It's an internet challenge. We're back. So we're just talking about the fact that the liability involved in over encouraging founders.
Yeah.
How do you think we address that? What can we do as a community to?
Well, I think the first thing is what's the outcome? What are people trying to do when they're trying to build something and take something to market? I think great founders love product, and they want to have impact with their product. And so, what does impact look like? Impact looks like customers, engagement, utilization. It also looks like revenue, ultimately, at the end of the day, and scale. And so I think you've got to think about what does that scale look like? Again, that comes down to, am I a venture business? Am I not a venture business? But if you're a venture business, then you've got to get scale into it, and you've got to really kind of grow it. And if you can't see a runway or a view to getting that kind of scale and growth, then you've got to really reassess what you're doing.
Yeah. And do you think we buy into the myth that there's some sort of first mover advantage? Is that one of the things that causes founders here to hold on and think they've really got this is their one shot?
100%. Yeah. I mean, I think, we see lots of different things in Australia. People, asking us to sign NDAs on before seeing business plans or IMs. People being kind of concerned about sharing what their idea is because they feel like someone else is going to steal it. Those things are myths at the end of the in my mind, great founders get out there, they circulate their idea with 100 different people. That helps shape that idea very early on. They get feedback on it and they go to market. Ideas are great. They are hard to come by, but execution is even harder.
Yeah. So true. Just going to divert to a question that's come in from Kimon. Hey, Kimon, good to have you on the show. He's asking, how is the 90% failure that we're talking about derived? There's a lot of loons out there who think they have a business. Is there a health benchmark for companies that fail? So how do we think about failure and measure failure? Do you have a thought on that?
Yeah, there's a whole bunch of industries or organizations that look at this sort of stuff. Startup Genome out of the US do a lot of benchmarking. Launch Vic have done a lot of benchmarking, and so they produce annual reports. And those annual reports look at, companies spinning out of incubators and accelerator programs, companies that classify themselves as a tech startup. And then they look at the kind of success ratio of those companies, how many shut down, how many kind of continue to exist. So that's where that data comes from.
Yeah, right. And do you think about bootstrap companies versus funded companies differently, or is your advice different to how you sort of think about the early phase?
No, I don't really think so. Like, there is definitely some companies that are more capital intensive than others. If you're commercializing research at a university, if you're taking hardware to market, those things are extremely difficult. Hardware is super hard and they are capital intensive.
Yeah.
The great thing about those industries is the fact that they've got a moat. They always they're highly defensible most of the time, but they're still extremely high risk. So those companies kind of are very different to maybe like a SaaS business or an AI business at the moment. So nothing's kind of the same. There's all differences in each of those verticals. But if we look at SaaS and AI businesses, then you can take those businesses to market very quickly, and you can get product market fit very quickly, and they're not super capital intensive, and you can kind of start to scale them off pretty much nothing. I think everyone's heard the Atlassian story about how, Scott and Mike, bankrolled that business off two $10,000 credit cards. And I think they were doing 50 million in revenue before they got to a point where they took the money from Excel. So we definitely see a lot of that.
Yeah. It's the old story that you want venture capital to accelerate, pour fuel on the fire that you've already created, not try and start your fire, right?
I think that's exactly right. We can see, capital coming in early to de-risk it sometimes, and that's different. Everybody's different, and everyone's got a different situation. Some people have access to two $10,000 credit cards, and some parents that want to throw in a couple of $100K, or family and friends where they can raise $250,000 from. Some people go through incubators and accelerator programs where they get $50,000, $100,000 to go through a program like that and kind of kick things off. Other people, don't have access to those sort of verticals and struggle and need to raise a bit of money off the bat with some different folk. But, in Australia, we don't have a lot of early stage investors, and we don't have a lot of VCs that focus on first money in, especially to founders that don't have a history or a track record. If you're a first time founder, I think it can be very, very difficult to raise money without having a product in market that's got some level of validity.
Yeah, right. I wanted to go back to a conversation we had before we were on air, and that is, a bit of your background. You come from the recruitment sphere, and you sort of wandered into the venture space in some ways. Can you tell us a little bit about that? Because I always find it really interesting when you get someone coming in from a separate domain, bringing value into somewhere. It's quite an innovation happens at the edges between two worlds, and it seems like that's part of your backstory. Is you've been able to see these two different worlds and being able to create a little bit extra value, and you've sort of come into the space and had some real execution experience, which you mentioned earlier. Ideas are important, but it's that execution that's really, really key. I wonder if you can just talk a little bit about some of the things you've learned through that journey you can share with us.
Yeah, well, I think at the end of the day, I'm a very inquisitive people's person. So for me, it's all about people, and my kind of side of the investing is all about the people in the business rather than the intellectual property. Like I find like ideas are very, very hard to pick, basically, and they change on a constant basis. Industry changes, technology changes. It's very hard to think about this great opportunity right now is going to turn into X in 5 years' time. I tend to focus more upon who's the founder, what's the attitude, what's their approach, and think about things like how do they think about getting investors? How do they think about pitching and articulating their business idea? How do they think about selling that business idea to other people? What we don't realize sometimes with founders is that there's a very strong element of sales to being a founder. You've got to sell to investors. You've got to sell to employees to get them on board. You are constantly selling that dream all the time. And that takes like a lot of robustness, because a lot of people tell you no. And so you've got to kind of pick yourself up off the ground. And you've got to really, you've got to believe in what you're doing more than anything else. So, yeah, I think that's where the intersection for me always come in, is backing founders with that kind of mindset.
Yeah. Yeah, so true. I think, one of the things that we've realized in our business, we started off being very focused around diagnostics of business models. And we realized a lot of the root causes come back to capabilities and mindsets of the founders. And when you start to work on that in addition to the business model, you realize that even if the business model is not successful, you can strengthen the founder. And that is a journey that's always up and to the right for founders, because you can always learn from that experience, which goes to your point with Excel, why second time founders are even better. So what's some of the advice you'd give to an early stage founder that's just starting out? Do you have some sort of standard advice that you give to people that are saying, "Oh, I'm thinking about starting a startup"? What's your
Go find other people who are building businesses that you think are really interesting businesses. Reach out to them. So not enough founders reach out to other founders. So step one, you can reach out to anyone in today's world. And LinkedIn's a great tool. Doing a bit of research and going, "Hey, Kirk, you're building this really amazing business. I'm thinking about building something in this different vertical, but you've kind of got this expertise. Would you mind catching up with me for a Zoom call or for a coffee?" So finding the right audience and really researching that audience and going after it and getting some engagement. A lot of these people end up turning out to be investors at the end of the day. We've got a couple of our members who are just so exceptional at doing this. It's really kind of inspiring. So, your ultimate success is all about the people that you surround yourself with.
Yeah, so that's great advice.
Yeah.
And there's a certain aspect of hustle there. I think that's another thing. We talked about the Silicon Valley culture before. It's that hustle, like the volume of people that you need to meet as a founder. Can you talk about that? Because I think we have different expectations here in Australia than Silicon Valley in terms of just the number of people you need to interact with, whether that's customers, whether it's employees, or whether it's investors.
Yeah. It's I think we see sort of people who are trying to raise here, and we'll ask them, how many conversations have you had? And they might say things like, "I've spoken to, I've spoken to 10 to 20 investors, and I've only got 2 that, are interested in investing in me." Generally, if you're in, San Francisco or in the Bay Area, you would find that people would be having 50 to 100 conversations before they close the round. Now, part of that is they're also selecting people. Part of that is that they're having meetings with people who then introduce them to other people. There's a lot of times you might meet someone who says, "Hey, look, this is not right for me for these 5 reasons, but I've got a friend or I know someone who would be a great investor in this business."
Yeah.
And that's what I love about our industry more than anything, is that play it forward mentality, where people ultimately really want to help each other because they appreciate how difficult it is to get something off the ground and then scale it.
Yeah.
So there is a great and supportive environment that's out there. This would be my advice to people. Use it.
Yeah.
Take advantage of it. Be curious, be engaging. But more importantly, I think as founders, we get so wrapped up in the day-to-day of trying to build something, we forget that part of that role of being a founder is going and engaging with how we shape our product, understand how we scale more effectively. You've got to allocate 20, 30% of your week to engaging with external folk that can help you build the business.
Yeah, I think that's such good advice, and I think it's such a important item on your expense forecast. If you're not able to put that 30% of time aside, it's a false economy that you've built your business on, because you have to invest that time to build those relationships, don't you?
Yeah, you do. And we definitely see it. We get it. We call it the grind, and the grind is really hard. You're managing cash flow, you're managing, your personal life, you're managing working 60, 70, 80 hours a week. We've had founders, telling us they're working 120 hours a week, that they don't have a life, their girlfriend's leaving them, blah, 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 blah. It is brutal. It is really hard to then go, how do I allocate time for something that's not working on the product, basically?
Yeah.
But, really great founders will find that time, and they'll appreciate that engaging with other really smart people 10x's their performance.
Yeah, 100%. Kim online here that asked a question before. He makes another really good point, and that is that we don't seem to fall in love here with evidence of customer demand and traction. in Australia as much as we fall in love with some of the vanity metrics, like I don't know, getting raises or winning awards or whatever. Do you see that as a challenge here?
I think that from the investor side, we definitely see a lot of founders talk about the awards they've won, and I would generally people don't care about it. Like investors do not care about how many awards you've won. That is not something that they will look at or care about in any kind of way. So that's the first thing. I think it's a hard market here because we're mostly B2B SaaS, right? And B2B SaaS sometimes, like how many customers can you get here? It can be very, very difficult to then go, I've got 30, 40 customers and I'm scaling up those 30, 40 customers. You can have one or two customers and then you go, have I really got product market fit or do I don't have product market fit?
Yeah.
And then, some of our enterprise customers here are super annoying. They're not super entrepreneurial businesses who are helping actually scale your business. They then ask you, what about this product feature? Or what about this? Or can you build this for me? And it's kind of like you go down these rabbit holes of moving away from your original vision to appease a certain amount of revenue that's coming in the door.
Yeah.
There's a lot of rabbit holes.
Such a good point. Such a good point. I want to move on to Innovation Bay because you guys have been building this for years now, and it's gone through I think a fairly significant pivot in the way that you're running it. I think the aspiration and the vision hasn't really changed, but what you're doing. Can you just tell us a little bit about what the long-term vision that you've had since you started the business and where it's evolved to and how it can help founders?
Yeah, sure. Yeah. Well, we started with very humble beginnings in Sydney and kind of expanded, and the community was really made up of founders and some investors who'd come together to really help each other. Ultimately, it was like a self-help group. I generally find founders, we speak a different dialect of English. And so when you can get together with other founders, you remove the misalignment sometimes with intent. And so it's really nice to, I'm sure everyone on the podcast has experienced that time where you sit down with another founder, you start talking about shit and you're kind of like, oh my God, someone who finally gets it. So that was the kind of Innovation Bay was the finally someone gets it group for us, basically. And we loved that. And we kind of scaled it for a long time and it was a passion project. And then I think in late 2019, early 2020, we kind of decided we wanted to pivot and evolve it a little. And part of that was we didn't feel like we were making the sort of impact that we really wanted to make. And for us, impact is, we're not building businesses. We're more the guide around helping people build businesses. And so we want to create more 100 million revenue companies in this country. And we know that that's really important, right? Because that scale piece is so important because it has derivative effects across the whole ecosystem. So in order for us to do that really effectively, we needed to bring together three core groups, which is venture capital, family offices that were really active in our space and knowledgeable in our space, and founders. And so we launched those kind of three core products back in 2020, and it is a membership organization. The reason we chose membership is that we needed a financial mechanism to underpin it so it could support us to reinvest in it and scale it and grow it. And we believe, a bit like a SaaS business, membership was a great model for that because if we're delivering very good value, people would renew, and if we weren't, then people wouldn't. And so that's where we sort of started, and we've been slowly scaling it since 2020.
Yeah, great. And how do you target different founders? Is the founders targeting different groups, or how do you think about it?
Our founder product is very centered upon peer advice. We believe kind of peer advice is really critical because what we saw in market was founders getting advice from really random people. It was you should go over to San Francisco and raise your seed round when you're pre-revenue, and you'd be like, who told you that? And it was blah blah. So for us, it was about founders learn the best from other founders. So you need to create a quality check around that, of course, and then you need to define that in stage because the stage of 0 to 1 million is very different to the stage of 5 to 10. So our product set is based on peer advice centered around the stage of growth, really, at the end of the day. We do that in very highly confidential, very informal ways. So you can really kind of take that advice and then apply it directly into your business. That's the goal of it. We have about 80 founders. We have founders we do have some pre-revenue founders in our community, but most are kind of have got some level of product market fit and some level of revenue, all the way up to companies that are doing 80+ million in revenue.
Yeah, fabulous. And what about on the investor side? How do you support and help investors?
Well, our two investor groups are the family office group. So we have about 30 individuals in that group that are what we consider extreme smart money. And so they are people with significant portfolios in tech. A lot of them are ex-founders themselves, or they're big family offices that have a very, very big focus in tech. And so we don't invest as a syndicate. We find that there's a lot of great syndicates in Australia. We didn't want to kind of compete in that syndicate kind of model. We really wanted to find people that were probably writing checks for 50 to 250,000 per investment, and they wanted to come in. They still want to learn. They want to involve their investment theses, and they want to kind of invest as a community. So we found that those individuals invest in very specific verticals where they have knowledge, but are also interested in other verticals where they want to learn from other people like them. So that's kind of what we do. We run an IC. We're doing about a deal a month. Average kind of group check size for us is somewhere around 350 to maybe 500,000. It does vary. It's up and below that. Really what we look for are companies valued at the sub 10 million that have great product-led founders, big scale, big ambitions, where we can really help out. So, and then we operate a VC group. Yeah, our VC group's actually our biggest community. It's been super active for us, and the focus with the VC group is we want to see that venture group learning from each other. It's still pretty new, even though the Blackbirds and the Airtrees and Square Peaks have been around for a while. There are a lot of first-time VC firms, and so again, that play it forward mentality. VCs come together to learn from each other, which is fantastic, and they also come together to invest with each other. What we're seeing in a $5 million round is 3 or 4 VC firms in that round. There's not normally one. And that's a really good thing because that helps drive the general volume of investment going into the industry.
Yeah. And it accelerates that learning as well. I think that's one thing that we perhaps don't talk about enough to founders is that investors are on that learning curve as well. Just the game of investment is coming to learn, and then the market's constantly changing. So what does investing in the AI world look like versus cloud mobile? There's a lot of knowledge exchange that's needed to be really good at this, isn't there?
A lot, and that's the great thing about venture. Those folk, a lot of the VCs in Australia, either come from finance or they come from being an operator. And so cross-pollinating those two is a fantastic situation because they bring a lot of value to founders.
Yeah, 100%. I want to bring in a question from Brianna in Dallas. She talks about expansion. How do you know if your company is ready to expand internationally? It's a pretty broad question and not knowing a lot of context there, but we got some sort of general advice.
Yeah, well, I can only talk to what I've seen, and I generally sort of say most Aussies expand into the US as their first market. We do see Europe as an option there. That happens naturally with customers already being acquired through the process of building out your business here. So what you generally start to find is that, oh, wow, I'm looking at my customer base and I'm realizing 20% are actually in America. That 20% is starting to grow and starting to scale. So then the question mark becomes, how do I service that? And then how do I take advantage of that? Obviously, the US market is so much bigger than the Australian market. And we would say Australia is a great alpha beta market to test your product in, and then the US is a great market to scale your business in. How you actually then scale it is a tricky scenario, and it's different for everybody. It used to be the old playbook, where you would get a bunch of customers, then head over to San Francisco and then raise a bit more money and build your San Francisco team. That model's out the window. And it really depends upon where are your customers. We are seeing a lot of Aussie founders move to Dallas at the moment. It's a super buoyant market. And I always think of the US as actually 52 countries in a country. They've all got different tax systems. They've all got different pools of talent. They've got different venture. They've got different verticalization in products and services. And so it really kind of depends upon a bunch of different scenarios. based upon how you then leverage that potential growth and expansion.
Yeah, great answer. Part of what I hear there is looking for that natural market pool. When the market pulls you there, that's a good time to go. So that's good. The other thing which I think you touched on there, which is really important, is that things are changing all the time. The playbooks that worked, 5 years ago or 10 years ago, are just changing all the time. And I think getting back to where do you get quality advice from? One of the things I think is really important is working with people that are still in the market today, not someone that's left the market 5 years ago and is going to give you that stale advice. Have you got any insights into what's changed? What are you seeing changing now versus 2 or 3 years ago, for example, that you can share with founders?
Yeah, well, I mean, the first thing is you've got to do your research. And well, the first thing that's really changed is the global market. You can reach out to people in London or New York or Hong Kong or anywhere. If they've got vertical expertise in your product, they will probably engage with you, right? And so, first of all, be bold. That's never kind of changed. Don't think anyone is unattainable. Be ambitious and be curious, and then go hard. Reach out to as many people as you possibly can, because you'll find there will be some random, entrepreneur that you've never really kind of seen of before in Germany who intimately understands, what you're trying to build and is super excited by it, who may come in as an investor in some way. So really spend the time to build that network out for yourself. Think about what your local market is. There's a lot of great events that happen in Adelaide, Melbourne, Sydney. Be active in them. Put yourself out there, go out, connect with people. Don't take advice from anyone. Think about where their advice, to your point, is coming from, and think about what the scar tissue is that supports that advice. Super important.
Yeah. And do you have any advice for founders networking more broadly beyond just the founder ecosystem? If you're selling into banking, or if you're selling into education, going to education events or banking events, or I don't hear as much advice talking about getting amongst your customers as much. You got any thoughts on that?
Yeah, I mean, it's the Americans do this so well, right? Because there's such a conference, culture where they have these massive conferences all the time. And they're so verticalized. You can go and then you can get a really amazing view of your customer base. And I would highly recommend Aussies to have a look at that. If they've got global aspirations, look at that kind of US conference scene and go over there, and you will find there will be like a conference in your vertical with, 1,000 people attending, basically. It's a great way to go test your product, meet a bunch of potential customers, and just kind of evolve your understanding of what's going on in the industry. I think in Australia, you just need to be cautious about, getting advice from one or two organizations. You need to make sure that you're spreading that advice across a whole bunch of different people. And it might be people that are in companies, and it might be people that have exited companies, and it might be people investing in companies, but just think about that diversified view of where you're getting that feedback from.
Yeah, great advice, and particularly marrying that with what you said earlier about people that have actually been there and done it. Founders that have actually built companies and exited. Their advice is going to be different than someone that might be very successful in a corporate context, or very successful running their own law firm, but it's a different kind of expertise that they might have.
Yeah, I mean, I generally find most entrepreneurs want to help other entrepreneurs. Entrepreneurs, who love helping other people. It's kind of part of our culture. So, yeah.
Yeah, 100%. I'd love to get your thoughts on where you think things are going. Where are the opportunities coming, with AI? How is investment changing, do you think? Before we get to the bottom of the show, I'd love to get your thoughts on where you think some of the future opportunities are heading.
Yeah, well, no one knows, right? I mean, the landscape is changing so fast. No one can keep up with it, and we're in a time of such rapid change. I've never experienced it, and so that's super exciting and somewhat nerve-wracking. But the first thing is, now's a great time to be even more curious than normal, and not to have pre-established opinions, and just to kind of go out and have a look at things. I think there's an incredible amount of opportunity. And I think the AI wave that we're in and will go through over the next 5 to 10 years will be a once in a multi-generational opportunity to build some incredible company. And so, we're super excited by the fact of the cost to build something, to deploy it, whether you've really kind of got a business or whether it's just an application of a business, those are the things to kind of think about a little bit. How you're building the data set that you want to build this business on, what's proprietary, what's non-proprietary. Those are the things that we kind of look at from a deal flow and investment point of view. We're seeing everything be AI first now. So I think things that are not AI first, they're a little bit trickier to invest in outside of hardware businesses in general.
Yeah.
Yeah.
I mean, to your AI point, I think what I'm saying is that AI used to be a differentiator. Now it's just got to be woven into everything you do. If you're not AI first in kind of your thinking, it's a bit like not being, internet savvy in your thinking, 20 years ago, right?
100%.
Yeah.
And so I think if you're not thinking about it, you're probably not leveraging the opportunities of AI.
Yeah.
And there are so many opportunities within the AI space now to help build and deploy your business. It's quite incredible.
Yeah. I've got another question here on from LinkedIn. What's your thought on government grants, R&D tax, some of the non-equity options around for capital?
I mean, I think it's a bit of an Australian secret advantage that we have a little bit of, the R&D tax concession grants. I see everyone use. I see them as a great tool to help fund a business in the early times. So you should definitely be looking at taking advantage of those. There are some great advisory firms that work on small fee or success rates for helping you apply. We see a mix of founders using advisory firms and doing it themselves. It just depends upon your expertise and capability, but you should definitely be taking advantage of them. 100%.
Yeah, I definitely agree with that. And what about government grants? You got any thoughts on that, or government contracts?
Look, I mean, the government is obviously a horrific customer, right? At the end of the day, and so you need to be.
Can you explain why that is? Because I completely agree, but just explain why.
Yeah. Well, they're not commercial. They're very demanding and they're very specific. And so your ability to replicate what you're doing with government is in Australian federal government or Australian local government can be very, very different.
Yeah.
So you can build a business off governments and working with councils and doing a whole bunch of things here, but it's very, very hard to scale.
Yeah.
Is what I would say. And so
investors will recognise that, they won't. They'll look at that revenue on your income statement and go, we kind of need to discount that because it's not scalable.
Yeah, pretty much. I generally think Australian enterprise and Australian government are more inhibitors for startup scale and growth than enhancers. If you look at, again, not just to say everything's American, but if you look at more European and US corporates, they get startups. They're much more innovative in the way that they engage with early stage tech companies. And they're much better customers than Australian corporate customers. So I think you need to be careful of them. And I think government grants, if you can get them, great. But I mean, I think you go down rabbit holes of applying to them and the process and the obligations to adhering to them. They can be nightmares. They can be real restrictors.
Yeah.
So,
at the end of the day, it goes back to what you said earlier. Your goal is to build a repeatable, scalable business, which is going to come from commercial sales transactions. So you need to know who that customer is that represents a whole market full of those sales transactions. You can go get, more and more and more of those transactions. And government funding is often not on that trajectory. So it's diluting your learning and diluting your use of capital.
Totally.
Yeah.
Free money can be great, but it always is very rare times that it's actually free money. It always comes at a cost of something.
Yeah, 100%. So for companies that are raising at the kind of level, let's just talk about the experience that you have in Innovation Bay with the kind of check sizes that your investors are writing. What kind of things would a founder need to have ready, or what would an investor be expecting to see at that kind of level of raise?
Yeah, well, again, look, it does vary based upon. We look at things like what's the experience of the founder. How well they know the vertical, and how many times have they started a company up before? Is their first time founder? Do they come from the vertical? What's their understanding? What's their knowledge? All those sort of things. So there's that, obviously. Second thing is, how far have they progressed the idea? So has the idea progressed to the point where they've got some customers? It doesn't have to be paid. Could be trial customers. And what we really look for is how those customers interacting with the product. Are they engaging with the product? A lot of people say, hey, I've got 3 people using, or I've got 10 people using my product. And then we will ask straight off the bat, how are they interacting with it? How often are they using it? Are they asking for more? How long have they used it for? What does retention look like? So we ask those questions about usage. The second thing we start to then look at is we go, how long did it take for those customers to buy your product or engage with a demo? Were you selling into them for like 8 years, or, was the sales cycle like a month? Was it 3 months? Like, how long was the sales cycle to engage with them? Because we want to think about scalability. The first thing we think about is, if we're going to put in, if you're raising $1 million or you're raising $500,000 at the moment, that's not going to be the only capital you raise. So the question then becomes, when will you need more capital, and what are the milestones that you need to get to in order to raise that capital? Normally, what those milestones are is a product evolution or customer evolution. Normally it's a sales. I'm going to grow my revenues from 25K, MRR to 500K. That'll change my valuation from 2 million to X million, that sort of scenario. So that's great. That's really clear. We want to understand then how many customers are in your market. How long does it take for you to go after those customers, and who's doing that? Are you doing the sales? Is someone else doing the sales? Blah, blah, blah. So those kind of milestones between valuation metrics are really critical.
Yeah. I love what you described there. Just to sort of summarize that, is you're asking about satisfaction and retention, how much usage, and you're asking about acquisition. And I think they're 2 really critical points that founders often miss in favor of revenue. They think revenue is some leading indicator of success. And I think what you've said is really important there.
Yeah, and overstating it is really bad. So we looked at we look at a whole bunch of different things, but we had an interesting one the other day where they were like, we've got a trial going with this customer at the moment, and the trial seems to be going well. We expect in June to transfer that trial over to paid, and then we expect that paid to expand over the next 6 months, and we expect our revenue line to go from 0 to 1.5 million over the next 7 months. No one's going to believe that. No one is ever going to believe that. So you've got to be kind of realistic. Like, as founders, we're all optimists. We're always like, hey, I'm going to get to 10 million sometime next year. And AI, we're seeing incredible scale at the moment, which is really exciting. But you've got to be really realistic with the milestone. So, an investor, a savvy investor, off that question will start to go, okay, who's the buyer? Who's going to actually go from that, make the decision, who's going to move from trial to paid? Okay, it's Jimmy. Have you engaged with Jimmy? No, not yet. We haven't had a meeting with him. Okay, well, all your credibility is out the window. You just lost all credibility. And as soon as you lose credibility with an investor, it's really, really hard to get it back. You're kind of like, you're trying to, run back up the hill, and it's super hard. So try and be conservative. What investors love, they love product-driven founders, and they love founders who have a realistic view of scalability.
I love it. Look, if this is the kind of advice and guidance you're going to get from Innovation Bay, I think it bodes very well for founders that are looking for some help. Before we wrap up, I can't believe that an hour is just about gone. What should founders do if they're interested in connecting with you or Innovation Bay?
Yeah, look, we have a great platform for founders to engage and come to be part of our community. They can come to some events, or they can be part of the membership. So you can click on those QR codes there. They play at innovationbay.com, Kali. She's awesome. And so reach out to either of us. We're always engaging for a chat, and we're very curious people. So we love having conversations with early stage founders.
Awesome. Yeah, the team's fabulous. Kali's awesome. I can't thank you enough. Have you got any parting thoughts for founders that are just getting started on their capital raising journey?
Yeah, look, be bold. You know, we need more ambition in this country. And so I know I just mentioned be conservative in terms of the scale metrics, but don't be conservative in your ambitions and your vision. Build a strong vision and believe in yourself, because we need more belief in our founders, need more ambition.
Fabulous. Phaedon, it's been an absolute pleasure to chat. I could chat to you all day. Thank you so much for your time. It's been a pleasure.
Thanks for having me on the show, Kirk. I really love what you're doing, so I really appreciate being included. Thanks, mate.
Likewise. Thanks, mate. Cheers. All right, let's look forward to our next show on the 17th of April. We have got the fabulous Taru Peters-Noeg, who is a founder and operator of Do AI. Taru's got some amazing experience, and he is right in the thick of building AI solutions. So he works with founders to move them beyond the hype and build practical applications, works with a lot of non-technical founders, and our focus on that show is going to be really how do you validate your AI ideas quickly, and how do you turn ideas into commercial business models? Because there's no point building great solutions that you can't commercialize. So if you're thinking about AI, and you've got a great idea for how AI sort of can solve a business problem, but you're not an AI expert, I think you're going to really enjoy the next show with Taru. Of course, if you're a founder looking for support and assistance to get more progress from your time and capital, at LeapSheep, we have a very concise offer called a strategy session. It's 3 hours of your time, and it will give you more clarity about your startup building journey that you can get in any other 3-hour engagement anywhere. It's incredibly affordable, and it is the best use of your time and capital, and I can guarantee it will save you months of learning things the hard and the expensive way. If you want to grab a slot for one of those sessions, there's the QR code at the top there. You can jump onto one of those sessions. If you're not sure whether the session is quite right for you, or if you just want to have a chat, the link at the bottom is the QR code. Reach out to me. Really happy to jump on a call and just have a chat with you if you're a founder trying to navigate the journey of a startup success. Thanks once again for joining on the show, and I look forward to catching everybody next time.